CleanSpark takes advantage of bear market to acquire mining rig contracts. The miner also partnered with TMG Core to expand its immersion cooling Bitcoin mining infrastructure. CleanSpark is taking advantage of the bear market and falling prices for Bitcoin mining rigs by buying existing purchase contracts from other miners for 1800 Antminer S19 XP computers. The Las Vegas-based sustainable Bitcoin miner said in a statement that the machines will add over 252 petahashes per second of hash rate to CleanSpark's Bitcoin mining capacity once fully deployed. You know who's going to make it? CleanSpark's going to make it, boys. Oh, awesome. So the Bitcoin mining specific computers called ASICs will start arriving at CleanSpark's facility in August, and shipping will continue through the next 6 months. The miner currently has 25,000 of the latest generation Bitcoin miners with a hash rate of over 2.5 exahash a second. The miner took advantage of the recent market conditions where sell-off in Bitcoin prices has led to the decline in ASIC prices. A tough capital market and difficulty in securing power purchase agreements by miners have also caused an excess supply of ASICs, which cannot be plugged in to mine Bitcoins, contributing to the lower power prices of the mining rigs, or the lower prices of the mining rigs, not power prices. Due to lack of funding, miners have not been able to fulfill previous orders of mining rigs for which they have paid deposits. Quote, with our research that we have done, we found that a sample set of public miners still owe $1.9 billion this year for ASIC purchases that they've committed to, end quote, said Galaxy Digital's head of mining, Amanda Fabiano, during a panel discussion at Consensus 2022 in Austin, Texas. The current conditions have given CleanSpark and other miners an opportunity to buy mining rigs at lower prices for expanding their operations. Quote, we were able to secure the contract at an exceptional price because of our strategic relationships and the unique circumstances that current market conditions have created, end quote, said Zach Bradford. The contract was brokered by Cryptech, a U.S.-based supplier of cryptocurrency mining machines and longtime partner of the miner, according to the statement. CleanSpark didn't specify the prices for the contracts, but a source close to the matter said that it had paid less than the spot prices for the rigs. The prices for latest generation ASICs have traded around $60 per terahash, the lowest since July last year when China banned mining, according to Luxor Technologies' hash rate index data. The prices topped just over $100 a terahash in December, the data suggests. CleanSpark also announced a partnership with TMG Core, a developer of high-performance computing solutions, to expand its immersion-cooled infrastructure for Bitcoin mining. The deal includes 257 units of TMG Core's proprietary immersion-cooled tanks that are specifically designed to improve the performance of mining machines while sustainably decreasing their failure rates over long-term use, according to the statement. In liquid immersion cooling, which is an alternative to traditional air cooling systems, mining machines are fully immersed into a synthetic hydrocarbon compound liquid that has no electrical conductivity and is fully biodegradable. The specialized liquid can reduce heat, power consumption, and noise stemming from the computers, as well as prolong the lifespan of the machines, allowing miners to maximize profit. Each tank fits 28 Antminer S19J Pro mining machines, and the units will be deployed in batches at CleanSpark's College Park, Georgia property and other locations. The partnership also provides CleanSpark with 2 megawatts of co-location capacity at TMG Core's immersion-cooled mining facility in Plano, Texas. In December, CleanSpark bought 20 megawatt immersion cooling infrastructure for its Norcross, Georgia Bitcoin mining facility. 8 of the data center's 20 megawatt capacity are already fully operational, while the remaining 12 megawatts are expected later this year, according to Wednesday's statement. Remember when I said opportunity is now, and obviously if you have the capital, it's especially now. It looks like CleanSpark is going to be moving in the proper direction and setting themselves up for, of course, the next cycle, which we will see the halving of Bitcoin kind of first quarter 2024, and probably 6 months after that or so, you would start to see the rise in the price of Bitcoin again. Speaking of which, I guess I should bring that up because a lot of people keep asking me, like, is this the bottom for Bitcoin and cryptocurrency? If we were looking at traditional super cycles and the way they function, 1100 would be the bottom for Ethereum, 21,000 would be the bottom for Bitcoin. We're in a very unique situation with the DeFi contagion, though. which could drive Ethereum down further, which would then affect the rest of the market because there's a ton of stuff. Everything is DeFi is built onto Ethereum, so it can affect even Bitcoin to a certain extent. But I do feel like I had doubted for a while if we were going to see traditional super cycle behavior, and then it did finally come to fruition. Kind of timing these things is still going to be difficult. Do we go lower? It's always possible, but I do feel like, from my perspective and not financial advice, this is the bottom. This is around where we sit until 2024. So buckle in for another year at least, or two years, at least, before we start seeing anything really crazy happening. Of course, there is crazy stuff happening that could affect this, because we talk about Bitcoin and its ability to be a hedge against inflation. However, that has not come to fruition necessarily at this point, as it follows traditional markets. But due to a big interest rate hike, the biggest in 28 years, Bitcoin did gain briefly and then drop back down today. The labor market is extremely tight and inflation is much too high, said Chair Jerome Powell. And that's kind of like a no Sherlock, right? But okay, let's get into it. The U.S. Federal Reserve on Wednesday raised interest rates by 75 basis points, or 0.75 of a percentage point. It is the biggest rate hike in 28 years, part of an ongoing effort to bring down soaring inflation, and has roiled the economy and markets from stocks and bonds to cryptocurrencies. The U.S. Central Bank also announced it would continue reducing the size of its balance sheet at the rate announced in May, according to a statement by the Federal Open Market Committee, which sets the Fed's monetary policy. The Fed funds rate, the range at which commercial banks can borrow and lend their excess reserves to each other overnight, will rise to a range of 1.5 to 1.75%, according to the Fed. Bond traders are pricing in a range of 3.25% to 3.5% by the end of year, implying an unusually rapid and harsh pace of monetary tightening, according to Goldman Sachs. Quote, the current picture is plain to see, end quote, Federal Reserve Chair Jerome Powell said Wednesday at a press conference after the decision was announced. The labor market is extremely tight and inflation is much too high. The last time the Fed raised its benchmark by 0.75 percentage points was in 1994. Powell said the U.S. Central Bank will not declare victory until officials see compelling evidence that inflation is coming down. Given that May's consumer price index measuring inflation came in hotter than expected, dude, it's so frustrating that like a majority of media is saying, and like our government is telling us like this isn't expected, when like if you just look at it objectively, like you can't have these, I'm sorry, you can't have these lockdowns and then have supply chain disruption and then drain your oil reserves and shut down pipelines and then not expect this to happen. I just don't understand why everyone wants to say this isn't expected when it was completely expected. We've been talking about this for a while. I expected it, and I'm just a dummy on the internet. Markets started reacting to possibility of faster rate hike in the days leading up to this week's Fed meeting. The closed door meeting started on Tuesday and culminated with the statement on Wednesday at 2 p.m. Eastern. Quote, markets loathe uncertainty and unpredictability, end quote, said Josh Alzewick, something like that, head of research at Valkyrie. A decrease in downward volatility will only likely be achieved with a pause or reversal of the current Fed policy direction. Bitcoin was changing hands at around $21,444 about an hour after the meeting, up from $21,076. I would say that's within margin of error, just personally, in the way Bitcoin is pretty volatile from like hour to hour is ridiculous. So I don't see that as any kind of sign that you saw a big increase in the price of Bitcoin compared to as a result of this, right? That's not what I'm seeing here. Most analysts had already priced in the hike in the days leading up to the meeting. Overall economic activity appears to have picked up after edging down in the first quarter, the Fed said in a Wednesday statement. Job gains have been robust in recent months and the unemployment rate has remained low. A lot of that's due to obviously like the loosening of the lockdowns, businesses opening back up, and the ability for people to actually go out and get a job. So it makes sense that you would have that rate basically go down. Inflation remains elevated, reflecting supply and demand imbalances related to the lockdowns, higher energy prices, and broader price pressures. I'm not going to refer to it as the pandemic. I refer to it as lockdowns because that's what we're talking about when we're talking economically, okay? During his press conference in May, Powell had ruled out the possibility of a 75 basis point hike, saying that it is not something that the committee is actively considering. Instead, central bankers had hinted at 250 basis point hikes in June and July. But the situation changed after the last consumer price index report showed an acceleration in inflation to 8.6% rather than a slowdown as expected. I don't know why they keep saying a slowdown was expected because it wasn't. I just don't think it was. It's like bugging me. I'm sorry. I'm going to harp on it. Powell had mentioned at his last conference that if the Fed didn't see inflation pressures abating and coming down, the central bank would consider moving more aggressively. Powell said Wednesday that last week's inflation surprise warranted strong action at this meeting, rather than waiting another 6 weeks for the next gathering. We decided we needed to go ahead, and so we did, Powell said. We came to the view that we'd like to do a little more front-end loading on that. In addition to the statement, the Fed published revised quarterly economic projections, or a dot plot, a pictorial representation of Fed officials' projections for the central bank's key short-term interest rates. Members expect the funds rate to go up to 3.4% in 2022 and 3.8% in 2023. Bitcoin's about to blow the cap off of this boys, because what you're going to see, which is going to be insane, especially if it continues to follow traditional markets, is we're going to see a lightening up of the inflation rates in 2024. Right? Because this is lasting through 2023, best I can tell. You're going to see the halving of Bitcoin happen at the same time, and you're going to see a new presidential election. All three of those things in 2024 means that like we're going to see Bitcoin really come to life around 2025, and it's going to be absolute insanity. So if you're sitting here and you're really like focused on the moment and focused just on now and you're stressed out, sit back and relax, boys, because you're about to see the culmination of all of these things coming together and just taking off. I'm not saying that like Bitcoin is necessarily going to go to the moon. I do think also other things, when this comes to the realization by the Fed, is going to result in a ton of regulation because they can't let this get out of control. But it is, like I said, to a certain extent inevitable. And it's going to be absolutely insane. I'm so excited for 2024 and 2025 because like you just see everything here lining up, right? For all of that to get, we're going to relieve the pressure is going to get relieved on the economy more than likely. You're going to see, like I said, the halving of Bitcoin, and you're going to see a new presidential election in the US. And even if you're not in the US, that is relevant because frankly, the US dollar does control the international economy to a certain extent. So keep that in mind. All of this does just point to absolute insanity in 2024, but you're going to have to live through some tough times. We all going to make it, but those who dip out early aren't, right? So just sit back, relax, and try to figure out how to pay your bills. I realize, like even me, I'm having a ton of trouble trying to figure that out. I get it. It's tough out there, but there is good news around the corner. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.